Did you know that your credit score can be easily manipulated? I'm going to tell you how after a little bit of information first. First of all, your credit score is what's responsible for determining what mortgage loan programs you're eligible for, as well as if you want to buy a car, what type of interest rate you get on a credit card, all sorts of lending opportunities. It also affects things like your insurance rates on your car, house, and it has a lot of other impacts. So if you can figure out the tricks on how to manipulate your credit score to get the highest possible, the better off you are in all other aspects of your life. My name's Tom Kalagher, Fairhope Mortgage. I help people all day long take their credit score from the 500s to the 600s, the 600s to the 700s, and even up into the 800s. I'm going to tell you how. First of all, there's 5 areas that the credit agencies look at when they're determining your credit score. The first is your payment history, and that accounts for 35% of your score. The next is your credit utilization. That accounts for 30% of the score. If you just focus on those 2 areas, you're looking at 65% of what affects your credit score. It's the biggest opportunity for improving your credit score. The length of your credit history accounts for 15, and then coming in at 10% each is your credit mix and new credit inquiries, new credit cards, things like that. The number one thing for you to do is to pay your bills on time every time. That accounts for 35% of your score. When you get a credit card or any sort of loan, set up so that it automatically pays the minimum balance on the due date. It doesn't have to be the whole thing, but that way if the due date slips by you, at least the minimum was paid and you didn't go late. The other thing to know is if you paid your credit card 2 days late, don't panic. It doesn't report to the credit bureaus unless it's 30 days late. So you might have a late fee because of that, but it's not going to report a 30-day late and affect your credit score. The second tip is to keep your balances low on things like credit cards. The credit agencies want to see that you're using a credit card and that you're using it smart. Definitely keep it below 30% of available balance. If your credit card has a $1,000 limit, don't ever let it go above 300. Ideally, if you want to get a credit score up towards the 800s, they want to see that credit utilization at about 10%. So you do have to use the credit cards, you have to spend on them, but not more than 10%, and then you can pay it off after that month. But yeah, so if you're working towards an 800 credit score, you might have a credit card with a $10,000 balance. That means you're going to charge about $1,000 every single month. You're going to pay it off at the end of the month. Keep that credit utilization really low in that 10% range. The next tip is how long your credit accounts have been open has a big impact on your credit score. So what that means is just because you have an old credit card that you don't use anymore, don't close it out. If you have a credit card that you've had for 8, 10, 15 years, don't close it. Even if you don't use it anymore, don't close it. Keep it open, keep it active. They want to see that length of credit history on your credit report. Everybody panics about new credit applications. They don't want that hard credit pull showing up. Yes, you should limit how many credit pulls you get. Don't go apply for 10 different credit cards all in the same month. When you're applying for cars, limit how much you're shopping. Don't shop at 30 different places. You could shop around a little bit to make sure it makes sense, but try to limit the amount of new credit applications you do. The other thing you want to do is have a variety of different types of credit. So if you have a mortgage already, great. If not, that's okay. You probably want some sort of installment loan and some sort of credit card or 2. So try to mix up the types of credit. If all you have is credit cards, okay, that's fine. But see if you can go out and get some sort of small installment loan just to get it onto your credit report and start showing that you pay that on time too. That's really for people who are just building their credit. If you already have established credit and you're trying to go from 750 to 850, I wouldn't start pushing adding new credit lines just to boost your score. If you're still building your credit, it's much more important. Next, you want to check for errors on your credit report. You can go to freecreditreport.com and pull a copy of your credit report once a year from all 3 bureaus. I'm telling you, I see people who tell me they have 850 credit or 800 credit, and then when we look at it, it's dropped down to 720. What happened? Something hit as a collection that they never knew they had. It was a medical bill. It was supposed to get paid by insurance and it didn't. They just sent it to collections instead of actually picking up the phone and calling the person. And if you just monitor that, see that something's on there and get it taken care of, you'll be great. When you're working on paying down debt, focus on revolving credit card accounts first. That's going to have a much bigger impact than focusing on an installment loan like a car. If you have pretty well established credit, but you're using too much on a monthly basis in terms of a percentage of available credit, you can always call your credit card company and see if you can get an increase. And that's going to change your utilization. The timing on all this, it's going to take 3 to 6 months to make a substantial change in your credit report. Just by starting to pay things on time, even if you're behind right now, you pay on time, you keep those balances low, and you can see your credit score jump up quickly. You might see a decent jump in a month, and you're going to see substantial changes within 3 to 6 months. So change can happen. You can go from mid 500s to mid 600s in 3 months by focusing on what the credit bureaus see as important. Last, avoid credit repair companies. They promise you the world. They say they're going to make all of these changes and they're going to dispute everything on your credit report. Let's be honest. When they dispute those things, they might fall off your credit report initially. It's going to go back on because the company has the proof that it was your debt. So don't fall for them. They want to get you hooked into a monthly payment to the credit repair company, and they're going to keep you hooked for as long as possible. Follow these simple rules, and you'll see your credit score go up quickly. If you have any questions, my name's Tom Kalagher. My company's Fairhope Mortgage, and I help people all day long get qualified to buy a home when they aren't qualified today. Thanks.